Good morning. Good morning, everybody. And well, we had ourselves back to par from last week's little drawdown, and we've made a decision to stay with this early in the week. We got plenty of time. Monday mornings have a tendency. People love to buy on Mondays. Oh, got to get all that mutual fund money in here, and we got to buy. We're gonna sit tight and on what we have and we're also monitoring a number of things. We also have Q schools, so we're going to do our best to let you have a view. And if you have any questions on who we are, what we're about, don't hesitate. Sure. Tomas is asking at the TY note futures. Sure. Let's look at interest rates. Let's go look. You're talking 10-year? Assuming. Let's go look at the yield curve. Yeah, crazy. We're at 4.5, 4.521. I don't think so, folks. Tomas. Now, the yield curve is steepening because these rates are rising, and this one is holding here. But this is the 10-year. Biggest, deepest markets in the world. Everything is priced off the 10-year. Everything. Biggest, deepest bond market. Many, many multiples of the stock market, and and they are rising. So, I just think that's going to be problematic. But at the moment, they're kind of dismissing it. Great for the banks right now. It might be why the Fed, did not want to cut. He did not want to cut the short-term rates. If he cut the short-term rates, then the spread then would be really, really steep. The banks would be making a fortune. Yeah, I think anything over 4.5, as we had maybe some speculation that we're going to 5. Um, I I think if we go to 5% on the 10-year bond, we're going to be down in the stock market 30, 40, 50%. I just do. I just don't think the the economy or the debt holders can carry it. I don't think so, but we'll see. Mhm. Crazy, huh? Look at that. Intraday though is intraday, right? Nobody makes, for the most part, nobody makes any decisions intraday based on anything fundamental to speak of. It may sound like heresy, but it's all machines. But when we look at the position now, we still have our options, right? We put on three big fat options on Thursday and Friday. We have three big puts on the S&P. And let's put the VIX into a daily view. Daily, we were down in here. Let's come up a little bit, and let's put the ES in a daily view. Daily. Oh, don't do this to me now, computer. Don't do this. I better be careful. We have new computers being made as we speak, getting ready. There's, a new cycle. If you don't know, that Windows 11, so we have some computers that needed updating, and we're actually going with Dell. We had some custom specs, and but they're not going to be here for a while. So I wish I didn't do that. Oh. Well, on a daily basis, she was up around 90. She's pulled back a little bit. I better put this guy back to a 5 minute. I don't want to jam us here. Mm-mm. Let me close some apps. Our options are flat, though. That all being said, we got quite a bit of money on those options out to the end of June, July, and based on where we got them and where we are, we're flat. Actually, down 180 bucks on three of them. Sizable bet. We're not trading it intraday, so we'll see. We're gonna leave it. Try to leave it be. And I'm sorry about that blank row here. It should update. I'll close some applications. New computers are going to have the latest Intel chip Dell. Oh, well, that's good, Tomas, to hear. Dell are good machines. This is the first time that we have gotten a Dell. HP just didn't have it. So we'll have the latest Intel chip. We'll have so what is it, 64 RAM, 2 or 3 terabytes, and capacity to take over 2 gigs of internet speed. It should be really really good. The latest graphics card, NVIDIA graphics card. So, but we're not going to get them until end of June. Yeah, we and I guess these machines on the Ethernet, we have upgraded now. We're going to see if it's a big difference, but to 2 gigs up and down. But the problem is, for the machines that we've had, they only go to 1 gig, right? They cap everything at 1 gig. So that also was a motivator. Look at them bring this sucker back. Yeah, dang it. Um, Monday mornings. We'll see where we are come tomorrow afternoon. That's our plan, to be short this market going into tomorrow afternoon. We'll see. We'll see if we can withhold it. Right now we have 7 micros on that position. 7 micros, and that was the position that we carried from last week. We carried it, and right after the market closed, right after we said goodbye to everybody, the markets were still open, and then Moody's had that downgrade, which you know the rating agencies are corrupt as hell, and I don't give it any credence whatsoever. They're just corrupt. But yeah, so if you and even this the newer machines, um, I think have a capacity to go to like 5 gigs, so we could expand into it. We didn't get the 10 gig. I don't think it's going to be necessary because at TradeStation, from what I understand, the fastest, and we're not trying to achieve that. We're more or less trying to make sure that we don't run into something like this where we got a blank a blank view here because we're taping, we're doing a lot of videoing, live streaming and stuff like that. So we need a bigger capacity, and I think that's why that's happening, that sort of thing. Um, but what was I gonna say? Um, oh, their latency I think is 10 milliseconds. 10 milliseconds out, 10 milliseconds back. You can't go any faster. And we were actually using Grok, Twitter's Grok, that AI function, to discern the specs of the computers we want. I couldn't tell you, what was right. So I kept going back to Grok. What about this? What about this? What about this? What about this? And that's how we arrived at um, the specs on it. And it did get to a point where it just said, if you do anything further, you're just going to be overkill. Now, you reminded me of another movie. You just reminded me of the movie The Big Short. Sure. Yeah, exactly. Yep. If you read the book, The Big Short, there's a chapter, the first chapter that is not in the movie, and it was something that I did not know that they did. But after 2008, and that's what's even going on here, today. I mean, it's no, it just is. But what they did, they needed to run an internet cable, fiber optic cable, from Chicago, from New York to a spot in northern New Jersey. I've told this story. It's true. It's in the book, and it was laid by satellite, and that cable had to go exactly the way it was measured because they needed to shave milliseconds. This is the start of the high frequency firms, and that cable had to go from Chicago. It had to go into people's houses, through cemeteries, under rivers, through mountains, under a Subway store. It just was ludicrous. The budget for it was in the billions. It was like $3 or $4 billion. It had no regulatory issues whatsoever because it was a matter of national security. So they just knocked on your door and said, "Hey, we're putting the cable under your house, or under your business," and and they knew that inside of 2 or 3 years, and it only took them about 6 or 7 months to get the cable done, as I understand the story, and they knew that within a few years' time it would be obsolete, but they had to get it done, and the reason why they had to get it done is for what we have today. It's all machine trading, all machines. If they said it was 90%, it's 99. There is just no way in hell. I had a conversation about this with somebody the other day. There's just no way in hell that the powers to be are going to let these markets move on the basis of Tom, Dick, or Harry. It's just not going to happen. They're machined as they bring it on back. That's okay. So we don't think about it. It's just one of those things. It is what it is. We're in the Matrix. We're also watching. Yeah, that's a beautiful look here. We have that is a credible trade here. We have a member that has asked us for something. Alan, I'm not going to say what he's asked us for. He knows. Um, and and we have a model of it up, and it is in one big fat trade. It's a very, very interesting concept off of Swing Machine. We're going to save it right now. We're not going to. We're going to let him work with it, but it was so interesting what he wanted to do. It was with Swing Machine Cubed, and so we went to work on it over the weekend. Got him out a prototype. We actually did some testing. I didn't tell him what we did. Gonna let him find his spot. He might find something that we didn't find, and but we have it up, and Alan, it appears to be doing what we think and what we hoped. We'll have to compare notes, but it caught this 1 minute beautiful trade, and let me go see. Now we're not in it. We didn't activate it, but we're shadowing it, letting it run. Let me oops. Go see how much. Oh shoot. Machine's acting up. Too many workspaces open, maybe. That 5 minute will refill here shortly. I don't want to have to reboot. So let me go look here. Yeah, wow, that trade's up off of Alan's prototype. Caught that 1 minute, 2 grand on that trade, Alan. If he can hear us, maybe not. He may be busy. So we will do this, right? So let me just share. Alan's an relatively new annual member. If you are an annual member and you have all of our programs, and you see something that you think is repeating, or you got a curiosity about something, if you can write it out to us in English, what you're seeing, and from there, what we can do is we can attempt to program it. Now, we haven't run into anything yet that we couldn't technically program within our skill set. Knock on wood, it's possible. There have been some things that TradeStation's not capable of doing. So, and even then, we still work on some things to have a workaround. So, if it's within our skill set, we will program it, and then we will set about to backtest and watch it and what have you. So we will, and we'll get you a beta copy. If it continues to hold promise, then we will get the beta copy out to all those folks that said they want beta copies, beta. And if it passes muster after a few weeks, few months, then it'll go into the library for everyone. So I'm not going to say just exactly what it is, because what we don't want to do, we want to give the person whose idea it is an opportunity. It's his idea, and novel. Oh, and I'll just say this is that when we do that, I don't have a deadline. So let me put this VIX back to a 5 minute. So we'll do it as best and as fast as I can. I don't have a deadline. But if it's something that is, really novel, I'm going to be eager to get it done too. So we'll see. So we have eyes on it, and but it's running just to pique your curiosity. Multiple time frames, multiple markets, and inverse. It's really. Now, I didn't tell Alan yet, and again, he may be listening. So we went through quite a bit of testing, and it had but we found what we think is a little bit of a sweet spot, and that's what I have up there. And I was like, oh, interesting. So we'll see. We'll keep you posted. So for everyone else, though, I just want you to know. Now we won't, we don't charge for that, right? But there is time. Everything is time, right? These the programming, we do all our own programming. They're very good programmers. We're not a programmer by trade, but we're pretty good around this. And they're about $300 an hour, the better programmers, and they get a minimum of 4 hours. Minimum. So it can be an expensive endeavor. We don't charge. We just keep building and working. I want to refresh this, but if I go to refresh this line, then these are going to block out. So I don't want to do that. It will eventually. It should clear here. So my bad. I do think that it's interesting that Thomas would focus in on the interest rate. I do think that that's all they got really is interest rates. And with the 10-year going now, historically in the United States, the 10-year Treasury historically is 4.5%. So that's normal. But we don't have normal debts. We're in an abnormal debt environment. So, these things keep going up. second one to 5%. What's going to happen when they go to roll this stuff off? And they bought, these banks and everything bought bonds with very low yields, and they're gonna, as rates go up, bonds will go down. So I think it's problematic. We're not gonna trade off of any of that though, right here, right now. We're not, but it is interesting to see how that's going to play out for sure. There she is. Okay, she rebalanced. So they have sucked this thing all the way back on us. Those fiber optic cables that they laid too, I mean, that was to facilitate what nobody knew was coming into existence were the high frequency firms, right? Getting, the results of the Preakness, milliseconds in advance. Imagine, that you could know the winner of the Preakness, you know, um, milliseconds ahead of everybody else in the stadium, right? You'd probably do pretty well, right? And enough time to get your trade in. So that's basically what it was. Um, they knew, though, that inside of a couple years that those fiber optic cables were going to be obsolete because were going to shoot them by laser. I don't know where they are right now with the technology, but they have all sorts of redundancies. Not they're not everything is principally in Chicago and in northern New Jersey and New York, but they probably have other data centers in Texas and God knows where. They probably have two or three complete data centers, probably all hooked up with lasers, satellites. One goes down, you're gonna have a backup. This is it's a matter of national security. Mhm. And they don't like a rising VIX. They don't like people getting anxious about stuff. Do you remember back, when the VIX was at 30, right? Everybody was so, I'm like, that's what in my view, that's what they target. They want to tamp that down. And the American people want to see it tamped down too. They want the market to go up. They want that. So they're willing participants. We as traders, would like, we like it. Just I don't want a VIX at 30 all the time, but every once in a while it's kind of sweet, and I'd love to see it again when I get those puts for end of June and July. Once again, I'm Bagadon. This is Stock Market Caddy. We're giving you just a view. If you take a peek at Swing Machine on the VIX, let's take a look at that VIX at 650 this morning. It does what? It goes short at 6:50 a.m. That was a warning to those members that were paying attention, Don. Susan reminds me. Don. Okay, now I had a different, I haven't really, last week I had a mindset of what I wanted to do, and it didn't play out real well. I haven't gone very far, have I? And I had a mindset here too. So um, I can have a little bit of a slump. So don't worry about me. But at 650, For those members that a little more disciplined, maybe the market is likely to do what? Go up. It was actually responding. The 5-minute ES at 6:45, 5 minutes before, starts to go up at 6:45. I got the time right? Yep. There's 2 grand. We look at the NQ, 840. 840 on the 5 minute. 4 grand. Brutal. Russell, Dow, gold. We're blocking it there a little bit. I didn't put Bitcoin. I think Bitcoin's going to go with with the Nasdaq. I saw a video. I mean, I'm sorry, kids. I think it's the most reckless thing, and it's really disgusting. Is this guy Michael Saylor? Now he might be right, right? He might be right. But he was interviewed, and there was a video playing of his interview. He's the MicroStrategy Bitcoin guru guy, which he's got a questionable past. If you don't know, from the .com era, I don't trust him as far as I can throw him. I don't trust any of them. But he actually said, I heard it. He actually said that if you want 100 times your money, the responsible thing is to go out, get a 30-year mortgage on your house, and go buy Bitcoin. I'm sorry, folks. He might be right. He might be. It might be going. He thinks it's going to 30 million a coin by 2040. Maybe he's right, but that is not responsible. Okay, it just isn't. But to each their own. I mean, I bend over backwards, and then bend over backwards again. And I love speculation. I love risk, but proportional risk, proportion, and measured risk, and measured speculation on anything and on everything. So for anyone to say that you should mortgage, which we're not, mortgage your house to speculate on anything, especially something like that, is beyond the pale. It just is. I mean, if you mortgage your house and you want to, invest in yourself and speculate on yourself, on something you're doing, on something, okay, maybe, but you better, involve your spouse, but you got to realize the ramifications of that. I mean, it's your home, where you presumably your spouse and your kids and everything else. But I just thought that was incredibly reckless and incredibly arrogant, for him to say, without thinking one way or the other about Bitcoin. And when I hear stuff like that, the little hairs on the back of my neck stand up, because the place is littered with some of these people. One of the guys, I forget his name, you guys may know. I can remember back, it wasn't that long ago. It was only like 3-4 years ago. And Peter Schiff was debating some guy, and Peter Schiff went off on him and just came unglued. And the guy was talking about, that, Bitcoin was throwing off interest, and if you deposited your Bitcoins with him, he'd pay you interest, and blah, blah, blah. And Peter's like, Bitcoin doesn't pay an interest. You're doing something. I don't know what you're doing, but you're doing something speculative in order to be paying anybody an interest, and you need to be disclosing what that is, because there's risk and yada yada. Well, long story short, I remember the interview. That guy, and if you know his name, let us know, but got sentenced to 10 years in prison. 10 years. It was some sort of a Ponzi. I think the whole thing is a Ponzi, but I think we got Ponzi's within Ponzi's. We're all about measured. We're not making any specific recommendations for anyone to buy or sell anything. Not making any claims that anybody should or shouldn't be doing anything with their money. I think you should have a very healthy respect. This is an endeavor that is comparable to maybe jumping out of airplanes, scuba diving, snow skiing. Um, we equate it to golf. It may not be quite as sedate as golf, um, but you want to have a healthy respect. And I think you should be skeptical of everyone, everything. Um, I know some have emptied their 401k. Well, that's yeah, that's awful. But Thomas says, I know some who have emptied their 401ks and put it into BC Bitcoin. I'm assuming they did it when it was 100k. I'm sure they got caught up on some guy's advice. Yeah, I mean, you can make money in bubbles, right? And you can make a ton of money. We have members that have done that, right? So I'm not saying that you can't make money in bubbles. You can. And the thing of it is, nobody knows for sure if it is a bubble or isn't a bubble. But if you find out later that you mortgage your house and your family for everything and it turns out to be a bubble, you will be destroyed. You will be wiped out. We don't do that. We don't do that. These are measured bets. Every single trade. Measured, 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 measured. Right? So, any case, yeah. But that interview, it was with that little pretty girl, Bruno. Bruno. And the guy actually said it. I mean, it's like, I couldn't believe it. Incredibly reckless for him to say it. And very self-serving, right? And I mean, I'm sure he does own a ton of Bitcoin, but he's also got folks that can hedge it, right? Now, at the moment, I can't change screens. I'm not going to do that. But when the new computers arrive, we will be able to do much more of that, and we'll be able to give you. And we're kind of planning that out how we'll do it and whatnot. We hope to have um, live feeds for our annual members on the website 24 hours a day. That's the plan in any case. We hope so. And also be able to show you other screens. One of the tools that we use is something called the Nicholas timing model. The Nicholas timing model. And the Nicholas is based on three data streams of each indice. The indice itself, the ES for instance, the NQ, the Russell, and the YM. So it receives, this algo receives the data stream of each one individually. It also receives the data stream of the VIX and the data stream, Thomas, of the 10-year yield. And the algo makes a decision to buy or sell each indice. Now, when we did this, we didn't know exactly what we had and did a lot of testing. We didn't realize how much of a commodity these markets are, because the markets generally move within a day of each other. So back on May 7th, it's only May 19th, the Nicholas goes long. All four markets. Now we need the VIX to confirm that signal, usually on the same day or the next day, in the opposite direction. And the algo did just that on the 8th. That trade now takes quite a bit of capital. If you used minis, if you used one mini in each of the four and short on the VIX, you'd be up close to $60,000. Just one. Now that takes quite a bit of capital to go overnight. You could certainly use micros. You could certainly use options. But the NQ, it went long on May 7th at 5 p.m. at 19,961. So you could have also got a call option. That one position on a mini is up $29,000. It's really, the Nicholas continues to be shocking to us. It really is. It's the first algo that we look at every night, and it's shocking to me. But it really makes sense, because if they're going to target and manipulate the markets, what are they going to manipulate? The VIX and the 10-year yield. That's what they do. That's how they, it's one of the ways. Of course, money supply, but that's all they got. We'll see. But Nicholas is still long. And I can't tell anyone. I can't look at a chart. I can look at other charts, but there's nothing. Nicholas is entirely a math model, so I can't put anything on a chart to look at it and say, oh, it's going to do this or do that. It just is, and it's unique in that it isn't, and it's unique from it's not seeking trend. It isn't. It's seeking the expansion and contraction of volatility, and it's making decisions to buy and sell. So if you had been a monthly member, you would have got the buy signal, the long signal on Nicholas with everyone else, including me, and never put enough on it. I never put enough. I never get it all. I never put enough longs on. I never put enough shorts on. And I never get it all. We only get our share. We try to get our share. It's crazy. Crazy. And I say it every time that Nicholas does this, because even on that signal, I had to be really careful. And I think I said something they usually say, look, folks, Nicholas is going long. It's an algo. Remind everyone what it is. and I try not to give an opinion because at that time on the seventh, I got to tell you, I was like, I don't know, I don't know. And he's got it. He got it dead. He got it dead to right, dead, dead on. Crazy. By the way, um, this this notion of putting everything on red or black or putting everything into one thing, for that bubble. Um, I did it. Okay. So when I share with you a perspective, um, you know, I did it. And when I was younger, I kind of wish I hadn't, right? I won't share with you numbers, but and I do with those that go through the Q school. I actually do. But I can remember it was in the late '90s, and we were doing very well. And there was this company. Um, God, I'm trying to even think of the name of. It eludes me at the moment. But they were doing the software for something that was going to be. They were going to be able to search data. And I said to Susan, I said, this is going to be huge, Susan. It's going to be fundamentally huge. They're going to have the software that's going to enable and empower companies to search these databases for information. It's going to be search. It was like, it's all going to be like in that movie, The Graduate. It's going to be about plastics, right? It's going to be about search. So I put a bet down, an inordinate, disproportional bet on it. Well, that was one of which. Now we were out of the way primarily during the .com. We were pretty much out. I even wanted to go short, but that was one that I was convinced of. And that's always the one. That's always the one you want to be most concerned about. It's when you're absolutely convinced. And I had myself so convinced. Well, the thing was trading at about $35, $40 when I started accumulating it, and it got itself to about 50, and then she started to come down and down and down and down and down. And it got to a place where I didn't even want to look at it, right? That's when you know it's bad. It ultimately, God, I can't think. You would think I'd remember the name, but I probably got now a mental block. It'll come to me. Wasn't Akamai. They no longer exist, and but it went down to $2 a share, and I still had it, and I'm like, I hated just looking at it. It was still in the account, this big hole, and wouldn't you know it, they got bought. They did. It was right after the 2000s, 2001, 2002. So I ended up getting taken out. And the son of a bitch, the people who bought it, the company who bought it, they didn't even give me shares. It was a privately held company that bought it. I believe they were private. They were soon to go public themselves. I don't think they bought it when they were public. I think they were private. So it was a private transaction, but I didn't get any shares. I got taken out. I would have wanted shares. You know who bought it? Google. I'm like, who the hell is Google? They ended up buying it. Now, I don't know what role it played, but they paid a hefty, well, but they got it like for $2 or $3. I mean, they didn't pay $50 a share for the damn thing. But so the thing of it is, then when Google goes public, and they did it with a Dutch auction. Susan and I are there at the computer. I remember the days when it was going. It was like getting ready to go, and I'm like, "What do you think, Susie? You want to go in?" And no, I don't think so, Doug. I'm like, it's going to be huge. It got to be huge. Search. It's like, we already did that, Don. Because she knew. So now, of course, if but the issue was, I mean, if it had been Google, of course, that would not be saying, no, I wouldn't say it. I wouldn't be saying it any differently. The mistake that I made wasn't the speculation. The speculation, I don't think is a bad thing. I'm not by any means. It's just that it's when a person does it and it's disproportionate, and when it's disproportionate. When it's your entire account, it's your mortgage on your home, it's your entire 401k, it's your one bet. Invariably, they don't work out. So it isn't the speculation in and of itself or the decision or anything. It's just doing it disproportionately. and you want to be here, for the long term. So it was painful at the time, but it's like, you know, and we were certain now, I wouldn't do it now. I wouldn't do it today, right? And as you get older, you'll become more respectful of time. When you're younger, you're very disrespectful of time, and I was too. It's like, yeah, we got all the time in the world, But as you get older, you'll realize you don't. Most valuable commodity of all. Can't buy it, can't sell it, but you can waste it. So many things. And when you go through Q School, we will have frank conversations and don't pull any punches. And I try to share with everybody the mistakes, and so that you don't make them again. And you do learn. That's the thing. Hopefully you do. Uh, and don't beat up on yourself on the mistakes, because it's the mistakes that you do learn from. When you get them right, yeah, you may not learn as much from being, on the profitable side. It's the ones where you get it wrong, and it gets stenciled on your ass. Very, very respectful. Very, very, very respectful. By the way, the CME is holding another challenge the first week of June. You can register at the CME for free. Anyone can enter the challenge. Um, you have to trade on their account, and there'll be a few thousand people across the country. It'll be for an entire week. Um, I don't like it because, in some respects, um, it encourages disproportionate risk taking, because they only give money prizes for the top three. So you've got to beat everyone else, and so that encourages large margin. But it can't be rigged. We will enter it, and we will try to win it. So we will be doing some things, and I can't program it, but I can. And it's a little clunky, so it will take our signals from our tools and then place them at the CME, and we will be out to try to win the thing. Um, and you can compete too, so have a shot at it. What you can't do is you won't be able to, place a singular bet either up or down and expect to win it. You can't. Um, they're very, very good. The people who will be in the top, the people who win it will be very, very good, and you won't be able to get away with that. So there's always that, a person comes in and, puts everything on Bitcoin or everything on gold and hopes, that that's the big week. That won't play out. I've never seen that play out. But we'll be in there. We've entered into three of them. I think it's three. Um, Two of them we were in the top 10 in the last day. Um, the first one we finished number 20 out of about 1,400. The next one, I think we were above 50 out of about 2,000. And then I think it was the last one. I think it was the last one. There were 2,400, and we finished. We were in the top 10 in the last day, and we finished number 7. So respectable, but we didn't win. But we are out to win it. I am going to try to win it, and we'll keep you posted as we go. And we'll register as well. We already did as Stock Market Caddy. So, but feel free. You got to take a little test of theirs, a little educational test. Probably a good idea anyway. It's pretty simple, multiple choice. Takes you about 10 minutes, and you'll be ready to go. Okay, you can see the 1 minutes. The 1 minutes are trying to pressure down, on these 5 minute trends. Um, so they're counter trends. I'm choosing. We got things going on today. So I'm choosing to take a more deliberate, more patient approach on this position, treating it maybe more like a position trade. It might not be the right thing, right? Um, and so don't follow me, right? Don't you want to get responsible for your own trading, right? So don't and I can change gears, right? Quickly, but that's what I'm choosing to do. I'm thinking that this is mutual fund Monday. People trying to take advantage of perceived weakness type thing, and hopefully this thing continues on. And I'm thinking by this time tomorrow this account will be back above par and moving on its way and get ourselves squared away. In the meantime, we're also looking at some very promising, really promising stuff. Oops, I got to pick that up. Okay, sorry about that, but in any case, so the Bulls are holding on here and still, and we're gonna try to sit tight on this. We have 7 micros that are short from Friday. Had a handsome run up, but we're gonna try to stay with it here. Not saying that that's what you want to do. We also have 3 puts on the S&P for June. Two of them for June 30, and one of them I think for July 10th. Fairly sizable bet. We're thinking this bitch is coming in. That's what we're thinking. We might be a little bit early on the dailies. That's a daily. We have the daily VIX was at 20, and the daily markets were up around 80. So they're still flirting up here. But we're positioning for the pullback. We'll see. Don't follow us. You want to get whatever it is you do. You want to get responsible for you. It's your money. It's your time. Even stock market caddy, we're in to trade your game. I always, if I go out to play golf, I don't want somebody else hitting the shots. I want to hit my own shots. If I'm going to go to the time and trouble to play, I want to play, right? So that's what we're about. That's going to be different for what most other services do. They're the guru. They got the Yale educations. A little cheap shot there. And they get the crack research team of all the unemployed brokers from New York. They got the smarts. Um, I say that tongue in cheek. You do a lot better just getting away. We provide an education on how we came to build the tools that we have. It's up to you to apply them. I was having a conversation with a gentleman earlier today. He was had called, and when you put a put or a call contract on the S&P cash, um, to give you an idea, if the S&P cash is trading at at 6,000, to give or take, right? Um, if you do that on the full index, that is like having the notional value is $600,000. Okay, so when you buy a put or you buy a call just in simple terms. You can do other things with options, right? But if you were to buy a put when it's at 6,000, the notional value is 600,000, for the time that you have it, or if you were to buy a call. So, that's quite a bit. So a put that goes out to, June on $600,000 is going to cost you like about 11 grand. 11 grand. Now, it's also quite a bit of money. Not saying that it's going to happen, but if the market should come back 10%, 10%, that would be what? 600 points, right? That put presumably would be worth, give or take, about 60 grand. Now, that's an outlier, right? I'm not saying that that is going to happen, not suggesting anybody do that sort of thing. Okay, folks, we're going to need the resources on the computer. Sorry for any kind of delay, between YouTube and whatnot. You very well may be seeing some delays, but we do need the resources, and we're going to wish you the best. We'll try to punch up a little bit either later today, maybe this evening. We'll do the best we can. We won't be on at all tomorrow, full plate, and and then of course we're gearing up even for the holiday week. So we'll try to be back up later, at least later in the week, and we wish you the best. Good to see everyone. You're very welcome, Tomas.